Incoming transmission standby. Welcome to the Nod News Network. Policymaker Boris Vujicic said the trend was beneficial because lower economic growth could contribute to lower inflation. The European Central Bank expects the current slowdown in the Eurozone economy to help reduce inflation in the region, Boris Vujicic, member of the ECB's Executive Council and ECB President, said on Friday. Global Market Forum. Vujicic admitted that growth was weaker than the regulator predicted, recorded at 0.3% in the second quarter. If the economy slows down much faster, that will certainly lead to inflation falling faster, the ECB policymaker said, adding that this could allow the regulator to cut interest rates earlier or in a more aggressive way and end inflation. For the strongest monetary tightening campaign ever, causing borrowing costs to rise to their current level of 3.75%, up from -0.5% just over a year ago. However, Vujicic said cuts would not be possible until the ECB demonstrated that inflation was on a steady track towards 2%. According to the latest report of the European statistical agency Eurostat, inflation in the euro area in August remained unchanged from the previous month at 5.3%, more than double the target. Vujicic also noted that a resilient labor market continues to produce rapid wage growth, which creates the risk of further price spikes. Wage pressures remain present and based on recent data, we do not expect a significant decline. As long as this continues, I fear the final stretch of deflation will be very difficult. The policymaker also warned that price growth could stagnate above the target level, forcing the ECB to make further interest rate hikes. We have reached the final rate, although as we said, we don't know where it is. We won't know in September either, we probably won't know where the final rates are in October or November, he predicted. However, the market is less cautious, encouraged by falling core inflation, which excludes energy and unprocessed food products. The index, considered an indicator of changes in inflation, fell to 6.2% from 6.6% in July. Experts polled by Reuters predict the ECB will leave interest rates unchanged at its next meeting later this month and until the end of the year, with a cut expected in mid-2024. This has been the Nod News Network, transmission complete.